Hey everybody, Graham here. We've got Thomas Rush from Consensys Labs, I believe, and that's what we're calling that program, and that's the VC arm of Consensys, which everybody knows. How's it going, Thomas?
It's going excellent. Really appreciate you having me.
No, really appreciate you being part of it. Consensys is such a big player in the space, so getting your input for our attendees and helping them understand how the VC world thinks about crypto companies right now is super important. So really appreciate you taking the time. I wanted to quickly ask, I was looking at your background before we get into the crypto side of things. You were recently in a project called On Deck, which is like a fellowship for early founders. Is that something you suggest for early crypto founders? Is that something they might get value out of?
Yeah, I think so. So the on deck team is really great. Period. The actual management team, they're putting a lot of energy into both crypto founders specifically. So they have a crypto track, and that focuses obviously on crypto founders. They've got some really great connections with CoinList being involved. Consensys was a partner of theirs last year, and I joined actually in a different capacity as a participant in the program, but really enjoyed it because I think there's such a strong cohort of talent. Really, basically it's all early stage founders that are right in that idea stage primarily. So when you're looking for feedback on everything as you're validating your market, validating your product, you essentially have a really strong group of people who can articulate feedback to you very well, and they're ready and waiting in the wings to partner, potentially be your co-founder, etc. So definitely recommend that if you're in that stage.
Cool. Yeah, and they're remote now, so maybe if you don't live in San Francisco, where you can tap someone on the shoulder at the restaurant next to you and ask them to if you can pitch them, and they say okay, it's probably a good place. Very cool. So, you work at Consensys now. They're obviously a huge player in the space. What was your first interaction with crypto? How did you get in here?
It's funny. 2016. Well, very first interaction was way long ago, but I did nothing with it. I had a friend who was into Bitcoin in like 2010, etc. Classic "wish I would have" story. And
Right.
but then when I really got into it was 2016. Just kind of went down the rabbit hole personally, doing a bunch of research. I had no idea what I was doing. Downloaded what was then I think the Geth client at that time, and tried to run it on my tiny little laptop, run a full node, etc. But got into the scene in New York here and kept running into the same people because the crypto scene was much smaller then. A lot of those people were actually involved in Consensys. I ended up doing some consulting for them, and then kind of the rest is history, so to speak, where started working with their social impact initiative as well as the venture studio, and then was offered a full-time job, of course, and that was mid 2017 when that happened. So I've been there for 3 years now.
Very cool. Very cool. Yeah, surviving that long through all the fluctuations is you must be adding a lot of value. That's very good.
Appreciate that.
Um, yeah. So, you've seen sort of some boom and bust, right? And we all saw the first opportunity was to issue a token and then insert any existing business metric or seen here and profit. What are some big opportunities you're seeing now in the crypto space?
Well, it's going to be kind of obvious and cliche, but it's true. The DeFi space. So,
Yeah.
everyone is saying that is probably the killer app. That kind of, in hindsight, it's almost shocking that people didn't see it coming, right? People were wondering about gaming, potentially this DeFi thing, which didn't have the same name back in the day. There was, of course, a lot of supply chain and more enterprise use cases. And I think, DeFi is definitely coming up as the leader, particularly because it's easily measurable in terms of the success and the value that's locked up in DeFi. And then secondly, because it is such a composable ecosystem, you're able to build on all the infrastructure that's been built to date. So stand on the shoulders of giants, use their infrastructure, come up with unique use cases for particular market niches or particular target markets that you're interested in or know really well. And by being able to use all the composability and all the software that already exists out there in the ecosystem, it's, I don't want to say easy, but much easier than a couple of years ago to add value to that space and potentially generate or create a revenue generating profitable business.
Yeah. Yeah. There's, countless interest bearing accounts now that you can get without even having to know a whole lot. So it's really, really a neat space to be part of. Who's the last company you funded?
Um, well, most recently, we actually have done a few deals. So as in terms of timeline, I mean, we actually, are really pleased because just yesterday, Compound went live with their comp token, and we were
Yeah.
lucky to be a part of that deal. So, we're a governance token holder in Compound and are really excited about the decentralization of their network and their protocol lending platform, of course. Um, Atomic Loans was another one very recently that came out, and really young team, super sharp, really interesting use case, and they had some institutional backing from Initialize as well. So really excited to see what they're gonna continue bringing to market. I think they crossed 100K locked up on their platform recently as well, if I'm recalling the numbers correctly.
That's cool.
Um, yeah, yeah, and numerous others. We actually just had so there's Consensys Labs, which is, as you said, the investment arm of Consensys, and within that is Tachyon, the
Hmm.
DeFi accelerator that just wrapped up.
Yeah.
So they of course just onboarded another 9 portfolio companies through that program, and a couple of the ones that come to mind. I mean, Idle is really great. You mentioned about the different lending protocols. They
Hmm.
they help they help a user select the most rewarding lending protocol. So essentially, automatically switching between them so that you're constantly getting the best yield on your crypto assets.
Oh, neat.
Um, yeah. So and then there's a few others in there that were phenomenal. Simple ID, Transact. So yeah. So we're investing and really excited about all the stuff that's coming out.
Cool. Well, so you mentioned Tachyon there. I know that that's been around for a while. Are you guys going to do another class of that? Is that something people should be looking forward to applying for?
I believe so. So Gabriel Anderson, my colleague, is leading that. They just wrapped up the current cohort. Probably, I guess it was maybe 2 months ago now, as time flies. And I think they certainly planned a cohort actually for this summer and held off because of COVID.
Yeah.
Um, they were an in-person accelerator, and yeah, are thinking about remote first accelerator as well. Obviously, there's some elements that are gained and lost by doing so, the trade-offs
Sure.
that exist. But yeah, but definitely be on the lookout, and of course, sign up to their email list if you're interested in hearing about their next program.
Great. Yeah, we'll put out a link or something maybe at the bottom of this talk. Um, you also actually mentioned the compound token, and that was something I was going to mention. I didn't realize you guys were part of it. Just for people who don't know, also me, what's so exciting about that? I know that how governance tokens work in regards to MakerDAO. So maybe make that comparison. How is it working on Compound versus how it might work on MakerDAO?
Yeah, so I think it's going to be really interesting. I mean, you have a couple different elements, right? Compound is obviously a major player in the space, and they're decentralizing their governance, as we both just mentioned. So what gets really unique about that is essentially, obviously, people are going to be able to vote on different aspects of how that protocol is operated, right? Upgrades to the system, how do they make decisions as an organization? And I think what's what's particularly interesting is you have such a large player in the space. They're in my view, giving up a little bit of their ability to move fast and break things in traditional startup world. Because if you need to make decisions by a democratic decision among a bunch of token holders, it's going to slow things down a little bit. You're obviously subject to their opinions, and rightfully so. So it's really great in terms of the philosophy that they're bringing to bear to the ecosystem, and really living into that philosophy. It'll be interesting to see it, obviously, how it plays out in real life. Um, and then I think also in terms of you can be a crypto company and maintain that ability to iterate quickly and move fast and break things, usually by refining things at the top of the stack. So being able to iterate on your app or the UI, the UX, sorry, the application layer, the UI UX, and you're not gonna upgrade that protocol as much, right? Because you need it to remain secure. You need security audits, etc. So the fact that they're kind of the core of their business is being a protocol, a lending protocol,
Yeah.
and they're decentralizing it. Um, which has those trade-offs I just mentioned, and they want to continue to move fast and stay ahead of the market and continue to improve as a company. Like those three kind of elements and the tension that is between them, I think is what I'll be most interested to see is how that
Sure.
all comes to bear.
Yeah, no, it's fascinating to see. I've been doing some research, and it looks like there is actually pretty clear regulation around if you can't upgrade a contract, if you can sort of hit a few metrics, then a protocol can be seen as not a money transmitter, and therefore there's no licensing body that needs to do it if it's really truly non-custodial. Um, so do you know if that's part of that element where like if it's publicly governed, it doesn't need to be licensed as a money transmitter or anything like that?
Yeah, I mean so I certainly would typically use a hook and pull my legal team into here.
Yeah, none of this
It-
is legal advice. This rampant speculation, yada yada, all the disclaimers.
exactly, exactly. I think that's one element. I'm not particularly familiar with the nuances of the money transmitter license, but it's obviously very relevant also in terms of the security token versus utility token.
Sure.
So there's no clear delineation or like no one line in the sand, but if you decentralize your network enough, then that token no longer can be considered a security, is kind of the general wisdom, the general legal wisdom being passed around. And so that's one huge benefit as well in terms of that legal standing, so that you can disperse your token and you're not subject to the security laws in the same way. Again, with the big caveat of talk to your lawyer, disclaimer,
Sure.
etc. Yeah.
Yeah. If you try and launch a financial product and don't talk to a lawyer, that's your own fault. Nobody's don't come after me or Thomas for that. So you've been in the VC space for a little while in crypto. I know you think about sort of funding a lot, but how do you think the mindset has shifted? Right, like obviously, a lot of people lost their ass on investing in tokens many moons ago. You guys are focused on DeFi. Where do you think it's going to be going in the next little while? Like, outside of just investing in DeFi, but just VCs in general, what are they looking for? Are there more people coming into the space? Is there still attrition going on?
Yeah, so there's, I would say, a few different things happening. One, in terms of what they're looking for, which is one thing you mentioned. Like you said, 2 years ago was token for X, and you got funding from the community. The thing that's really evolved quickly, and I'm really thankful for it, is investors are now, the bar is raised. So investors are looking for, great, what is your discounted cash flow for this business? Let's run a model and see what the valuation of your network is if you're launching a token. There's methodology out there now that's pretty widely accepted to like get an estimate on what that potential the valuation of that network is going to be. There's analytics tools to look at on-chain activity. You're able to look at revenue, just which is the same as any other business. Able to look at developer activity in GitHub, etc. So all those things that, like, some of those are of course new to Web3. Some of those are just very traditional business metrics. Was reading an article the other day that someone was basically had created the equivalent of a price to earnings ratio, which is a standard public market tool, and they were applying it to crypto companies. So those are the things that I think crypto founders are going to have to start, wrapping their heads around and become familiar with in order to communicate really in a really sophisticated manner to investors. Um, and it's phenomenal because it means you have to be running a real business and not, the scam coins of 2017. And obviously that wasn't all projects, but we know there were some of them.
Yeah.
Um,
Some
so
even
there's that.
scams without knowing it. They were just so ideological they didn't realize that they were probably going to end up scamming people. So,
Totally. Yeah.
always assume idiocy instead of malintent. But and I don't forget what that is. But anyway,
Yeah. And then I think there's also some other elements, which is interesting. More specific to COVID, I mean, the number of deals is down just across the VC ecosystem overall, but surprisingly, valuations are going up.
hmm,
And I mean, it's borne out in the data, and I'd be happy to share links if it's helpful. There's a few folks who have run analysis on this, and a lot of it is, I think, the folks that are getting the deals done are strong founders. They have existing relationships with VCs, and because there's less deal flow overall, they're able to negotiate a better deal for themselves. And it's kind of counterintuitive to what I think a lot of people thought was going to happen during this
yeah,
downturn. So if you're in that position, this actually kind of counterintuitively might be a really good time to raise.
yeah. It actually reflects what's happening in the housing market a lot because if you couldn't afford to buy a house really, now you're shaken out of the market, and people that need to move are selling, and
Yep.
so prices are actually going up in most markets, and things are super hot right now in a lot of real estate markets. So similar, flight to quality kind of thing makes a lot of sense.
Yeah. Yep.
Um, so are you seeing? You said deal flow is going up, or prices going up. Maybe not deal flow is going down, but prices going up. Makes a lot of sense. Are you seeing new entrants into the market? New people investing? Maybe family offices finally coming in. What are you seeing as far as firms?
Yeah, so I think similar to what we mentioned before around the space maturing, there's certainly some of those new entrants coming into the space. I think we're still not to the place where institutional capital is like truly flowing in. We all hoped it would be by now. I forget the exact numbers, but institutional capital is in the trillions of dollars out there, and the total capital in DeFi, for example, is still in the very, very, very low billions. So we're a long ways away, and this is still the first inning of the game. That being said, I think the other thing that's happening is you have kind of a clear categorization of some of the funds and some of the investors in the space. So you've got, call them the mega funds. People like A16Z, right, raising 300 million for their crypto fund. Block Tower, Dragonfly, Multicoin. These are all hundreds of millions of dollars of funds. So they're leading rounds, looking for Series A, looking for those more sizable deals. And then you have specialized early stage funds, Notation, Blue Yard, even Samsung Next, and some of the CVCs, and then
Hmm,
and of course Consensys Labs, where we're of course smaller in terms of assets under management, and we focus on particular areas, so we know precisely where we can add value. But that bifurcation or trifurcation of the space wasn't happening until recently.
interesting. So it's the sort of general thing I'm hearing is everything's maturing, everything's becoming more traditional. So that's pretty fascinating to see. That Samsung was an interesting thing to mention there. So cool,
Yeah.
very cool to hear. You and I are both sort of outside of our crypto worlds, slight bootstrap, keep your equity kind of nerds. And I know you launched a product called Bootstrap that's for that kind of person. Are you seeing more teams take that route, just trying to grow on revenue? I mean, you would think in a composable financial ecosystem, it should be pretty easy to grow on revenue. Are you seeing teams take that route in crypto?
Yeah. So in the crypto space, I think it's interesting because it's a super blurry world in terms of these lines between, like we were saying, equity versus tokens and all the different funding models. So I would say yes, with the caveat that many of them are looking for funding because if they have to build, they need a deep bench to build like a complicated protocol. That's still probably a VC style business. That said, there are teams that if they have the talent on deck to build what they need. Excuse me, kids in the neighborhood.
Oh, good.
Then being able to generate revenue and potentially open up the ability to fund their company through the crowd, essentially crowdfunding via ICO or some version of that, IEO, etc. I think it's shifting. I think really what's happening is that the desire to do that is far ahead of kind of the ability and the
Hmm,
regulatory clarity that we have.
yeah,
Um, like it feels like the cultural shift is there. I just don't think we've got the tooling quite built out yet. And so as that catches up, I imagine it's going to continue to increase in terms of the people that most founders would like to keep the equity in the company they're building. So
right. Yeah,
it's it's a fair approach. I think it's just the tooling and infrastructure that needs to be caught up to that.
sure. I actually skipped over my infrastructure question, so there's the answer to that anyway. Where outside of Ethereum and Bitcoin, right? Like I know we've spoken before that you think that line, especially in the DeFi space, is sort of blurring for Ethereum and Bitcoin. But outside of that, where are you guys seeing opportunities right now,
Well, I mean,
or are you?
yeah, no, I know we definitely are. I mean, I think there's of course other layer ones that are launching this year, so it'll be really great as they actually, get to mainnet and begin getting users on, getting use cases, etc. So,
Yeah,
for example, Filecoin will be launching, and so that's a great example of somebody who is going to be a separate network, but they're going to, almost like they're going to want to interact with other chains, right? The interoperability is going to be key among
yeah,
all these chains. And I think there was a question years ago of, what's the winner? Like, who is it? Winner take all? Is it going to be multi-chain, etc.? In my opinion, we're far past that. It's a multi-chain world. There's going to be specific use cases. There may be a chain specific to gaming where you need, 1 million transactions a second because you have like skins and coins across all these gamers happening. But maybe that gets settled on the Ethereum mainnet. Um,
or
so
just proofs or something and send. Yeah,
exactly. So I think in my view, there's still a ton of opportunity there. I think you have the kind of these other layer ones are going to have more narrow use cases, whereas before the general wisdom was that you could build a layer one that was a little more of a generalist blockchain. And I think we're kind of similar to the VC landscape, getting more mature and getting more narrow in terms of specializing. I think that's happening on the technology stacks as well.
cool. Okay. And what are some common mistakes that you see a lot of founders that pitch you making?
A big one is basically, needing capital, or at least being in the mindset that you need capital to achieve X. There's often kind of a like, all right, when we get this, pre-seed round of 500K, we're going to go out and we're going to validate X, Y, Z. But most of that validation can happen for free. It's
Hmm.
time and sweat equity, and so that's not only are you coming to the table without that validation, which kind of hurts your valuation and your overall pitch, but it also shows that you haven't just that grit to go out and get the answers, and you're seeing this dependency that doesn't necessarily exist. And that's probably the kind of number one. I mean, and part of it might be my personal bias towards that in terms of, like I'm more action oriented. So that's one element, is really getting as far as you possibly can without that. And then the flip side of that is saying, if we were to ask you, great, if we give you this 500K, what do we get? I think a lot of founders, they defer to, the equity or the convertible note, whatever it might be that is actually being exchanged in the transaction. But what's key is understanding what's the milestone that's going to be achieved. So obviously you're going to hire someone, you're going to, purchase ads, you're going to build XYZ, but what's the traction milestone that like is essentially being purchased by the investors? Having a really clear view on that. 500K gets me, to this valuation of your network, to token launch with 10,000 users, like whatever that milestone is. Understanding that and the steps you're going to take to get there is key. I mean, if you had all those boxes checked, you're in a really good place.
Yeah, no, I think that, and that's probably a pretty common uh, thing outside of crypto, right? Like
Yes.
people sort of see being a startup from the outside and think, okay, well, look at this company that raised this money, and they don't really have a product, and it's like, well, that doesn't mean they haven't done anything. That just means that they're the sort of V1 that they really want to get in front of people is on almost there. A lot of time, I think it's rare that unless you have been a previously successful founder and already have had a big exit, that people can get funded with just an idea now. So I think
Yeah.
that's probably a really good insight to give people.
And
Um,
you actually made me think of one other thing, if you don't mind me
yeah,
adding.
please. Yeah.
Um, I think the other thing is connecting your idea, your business and the problem you're solving, etc., needs to be very, very integrated with the tailwinds or the broader ecosystem. And what I mean by that is, like it's kind of the classic, like why now? Why is your
Hmm.
business successful now? And I like to break it down into two things. So you've got your essentially your macro tailwinds, right? Like where are we in this larger time frame? A16Z came out with their price innovation cycle, showing we're kind of coming up to the fourth cycle. So like having that zoomed out view of why things make sense for your business to be started now, and then also the micro kind of your micro tailwinds and how you fit into the landscape of what's happening, right? Like Compound just launched, OMG just went live with an implementation, Loopring, their ZK rollup is doing transfers now. Like how are all these things and all of the activity in the ecosystem, you know, equating to a world where your success is inevitable? So I think, you know, not just focusing just on your business, but all of those kind of environmental factors is something that just shows you're a really thoughtful founder and that you are in fact poised to succeed as a founder.
Right, right. Because I think a lot of people also think, does me getting funded a reflection uh, on how the VC feels about me? And it's like, no, that doesn't matter at all. Actually, it's more about how you are looking and can you return a fund, right? And we don't need to get into sort of basic VC terminology, but so one final question. It's just the thing that I'm seeing a lot of, and I haven't spent the time to understand it, and I don't know if I need to. But personal tokens, what do you think about it? Do you think there's any legs to it? What do you see in that world?
So I haven't dug in too deep, honestly.
Okay.
Been focused more on the DeFi side and also on
Yeah.
the yeah, we're doing a lot with our current portfolio currently. I think it's really interesting. I think the first place that my mind kind of goes to is the Web 2 implementation of ISAs and everything as well. So I think it's
Hmm.
I kind of just philosophically think it aligns, and it's interesting to see if for people who aren't familiar, income share agreements. So you know the idea of take out a loan on your future future value creation as an individual.
Yeah.
And I think those are taking off, and there's a lot of validation there. So I think overall there's going to be this we're living in a world where there's a Web 2 version of the Web 3 thing, and those worlds are going to continue to get blurred. And considering the continual evolution of ISAs, the innovation that we're seeing in fintech around making transactions smaller, reducing transaction costs, reducing the kind of amount of capital needed to execute a transaction. So like reducing the barriers to entry, essentially.
Yeah.
All these things I think are going to add up to others and personal tokens taking off. The timing will be, I think is the big question. It's kind of the classic cliche that's true, which is the future's here. It's just not evenly distributed. So we'll see how long it takes to get evenly distributed.
Yeah. Yeah. I think that's totally fair, right? Self-driving cars exist. They're just not, that software isn't switched on yet. So
Yeah.
very cool. Thomas, this has been super fun. It's really great to get your perspective. I hope it's really valuable. I hope this sort of generates a lot of great questions for people for your talk. So where can people find you? What's the best way to get connected with you outside of the Q&A layers?
Yeah, absolutely. You can obviously find me on Twitter at Thomas G. Rush. You can find me on the Labs website. Reach out to us there, labs.consensys.net. I'm live on all the social platforms. I'd say those are the two best ways. Very responsive on email, so definitely reach out.
That's great. Awesome. Thomas, thank you so much. Appreciate you being part of the event.
Yeah, thank you.